Hello traders, and welcome to the market update for the week ending 9th of April 2021. I'm JG, member of the Vedanta Elite Trading Team here at Master of the Markets. And today what we're going to talk about is time frame correlation. So you might have heard the term before when relating to trading and in trading meetings or like presentations. What time frame correlation is when you look at the charts. Here, if you look at the top chart at the moment, you'll see that it's got a euro-dollar weekly chart at the top, and below the chart below is the euro-dollar daily chart. So what basically this is every bar here on this chart is a weekly bar. This is 1 week going along. I've just broken it down onto show you where the year end is and the year begin is. So I can move this line to here, and then that will tell you that this was 2020 beginning there. So this is up to there is 2019. This is all of 2020, and then going on is 2021. You can have this as a monthly chart as well. So on the top of the platform, when you look at the charts there, you can see this is the monthly, we've got a weekly, a daily, 4 hours, 1 hour, 30 minutes, 15 minutes, 5 minutes, and 1 minute. Okay, inclinations. So this is the time frame that is broken down for us on the chart, so we can look at the charts and look at each individual bar to see what it's doing at that particular time and the time frame that we've chosen. Okay, so how do we use this for trading purposes? So what we do is when we look at the charts, if we take a direction from a higher time frame, whether it be buy or sell, so you can take the trades in both directions as always, but what we're looking for is to try and figure out what is the direction. So here you can see we've got swing lows, swing highs. This is the smart money indicator, which is exclusive to Master of the Markets here. And this gives us a clear direction to say that this is where the market is turning, and this is when it was confirmed with the dot. Okay, so if we look at the current trend for this year, we can see that we've had a swing high occurred, and the market is at the moment going from a top to a bottom. So it's self-evident when we look at some of the information. What do we have here? We have the swing high confirmed, and then we can see that the market is trending to a downward direction. Okay, so we know what the trend is doing, okay, at the moment here. Here the trend is telling us is an up direction. Why does that say up there? Because we have reference points. So we have a swing high there and a swing low there. When you look at the next one, the next swing high is a higher high, and the low is a higher low. So when this happens, we have a direction. So this is telling us this is going in an upward direction. Okay, and then you can see that the next high is also another higher high, and we don't have a higher low at the moment because it hasn't occurred at the moment. So you can see the market is going up this way. This tells us is trending, is uptrend. But what we're looking for is the current phase at the moment. What is it doing? So as you can see, it's a downtrend there, going from a top to a bottom. So this is a top to bottom move. So once we know this information from a weekly chart, okay, so remember, as I said, that this is the weekly chart. You could take this onto a monthly and then correspond it with a weekly, or we're doing the weekly and I'm using a weekly and a daily. So the daily is a lower time frame. The weekly is a higher time frame. Okay, so higher time frame here and a lower time frame on this chart here. Okay. And on this chart, as you can see, what I've done is I've divided the months. So on the weekly charts, I've done it by year. On the daily chart, I've done it by months. So you can see that from here to there, this is telling you everything that happened within that month, the month of February, the month of January, and so forth. So we'll look at the current trend at the moment. So where we can see here that the market, we have a swing low confirmed here on the daily chart, and the market is trending to the upside. Okay, so when we look at this, we can see that this one here is a bottom to top move. So on the weekly, it's showing us it's a top to bottom move to the downside, and on the daily it's showing us it's a bottom to top move. So they are opposing. So if we have one coming down and one going up, then it's a less probability for us when we look at the charts to say that we want to take this in an upward direction. Okay, we're going to use a higher time frame to take a trade on a lower time frame to minimize our risk. So what we look for is which is a dominant trend. This time it's not a dominant trend. This is down, this is up. So we wouldn't be looking at possibly taking a trade here. However, if we had looked further back, say in March, then we could have looked at March and said, yep, it would have been still valid there. March being around there, we would have seen the trend coming down, would have looked at this and said, okay, so here we are. We've got a swing high confirmed there. Okay, we're looking at, this is where the confirmation would have occurred. So this bar would have formed by the time that this appears. Then we could have placed a trade on there, and then now we would have been in this trade going to the downside, either following as a stop loss at the low or the high of each bar until it comes down and takes us back out, or vice versa if it was a long trade. Okay, so this in March would have been a valid trade because this is a downtrend. This would have been a downtrend. So this is again would have been a top to bottom move, and that means the probability of this going to the downside was higher. Okay, there's a higher probability, and this is what we're looking for, to how we can get the trades in our favor to make sure that they go in the way we want, which is going to be the dominant trend. Okay, and we always want to trade with the trend. So when we do look at these charts, what we do want to make sure that we don't do is try and make things fit. So we have to be patient and wait for the trades to occur, because at some stage where this market is going up at the moment, we are going to get a turn, and then the market will start going down. And when it starts going down, then we'll be in a better position to take trades on the euro dollar here. Okay, so we have to be patient and wait for the trade to set up for us. Okay, when you look at it and you think, oh, possible, don't make it fit, see what is actually happening on the charts, but don't make it fit in because that's what you want to see. It needs to be kind of a little bit more disciplined than just taking the trade because you've made it fit the charts from what your understanding is. Okay, be patient and take the trades. So that's the time frame correlation. Okay, using a higher time frame to take a trade on a lower time frame, making sure that there's a higher probability going in the direction that we want, and it's a dominant trend. Okay, this can also work on a daily and an hourly chart as well. So here we are, we have the daily chart at the top, and this is the hourly chart at the bottom. The hourly chart is broken down into days. This is, a 12-hour day, and in the 12-hour day, it'll tell you that this is what the markets are doing. So we could look at the daily time frame and say, okay, what is the market doing today? The market is going to the upside. So what are we going to do? This is a uptrend, and it's going from bottom to top. Does that correspond with what we're looking at on the daily? The daily, as you can see, is a downtrend there. Okay, so this is a top to bottom, and therefore this is not in line with the trend. Okay, on this one here. However, yesterday, you can see, yesterday would have still been a bottom to top move on the daily, on the daily chart. So the hourly charts, if we wanted to, we could have looked at this and said, okay, yeah, we have a swing low occurred. There's a swing low confirmation, take a trade entry, and then just follow it up until it takes us to a point where it turns and takes us out of the trade. Okay, so there you have a correlation from yesterday. But like I said, you have to wait patiently to make the trade setup occur. And when it occurs, then we take the trades. So to summarize, what I said is we have a higher time frame where we'll take the overall market direction to say where it's going. Okay, and then on the lower time frame, because we have a higher probability it going in the same direction, if it fits, then we will take the trade on a lower time frame. Also remember to be patient and wait for the trade to set up. Don't try and make the trades fit what you want on the charts. Okay, bit of discipline. So that's time frame correlation. Okay, what we'll do now is move on to the markets and see how the markets are performing for us this week on the Market Watch. So we're starting off with the euro dollar. The euro dollar is in a bottom to top move, is an up. It's in an upward direction. As you can see, we've had some clean moves there, showing some support and strength going to the upside. Today is not a bit sure. It's a little bit of an insider bar today. So let's see where this market takes us. I believe there's still a move to the upside on the euro dollar. Dollar Swiss, however, is the opposite. Same again, very strong move to the downside. And then today we've got an insider bar, so the market is slowing down, you know, possible the weekend coming up, and you know, less orders are being placed. But we have an insider bar there, gives us an opportunity to place our orders to the outsider bar. You know, so the insider bar -1, if we can place our trades on there in a probable direction, and then see where it takes us on after the weekend. Pound dollar, we've had a few trades on here. We do have some trades running on the pound dollar at the moment, and to the downside, because this is where it's been showing us some movement, and the higher probability is for it to go to the downside. So however, today we've seen a low test bar there. It's come to the bottom, it's gone back up, reverted, but there's still possibly more move to the downside on there. Something to wait and see how it occurs. Dollar yen, it's had a strong move to the downside, now showing a bit of support to the upside, but still early. It's not made its mind up to say which way it's going, but at the moment we're in a top to bottom move, something to keep an eye on. Aussie dollar, a little bit of consolidation going on. A quick drop down there, but when you look, there's not massive amounts of movements. It's in a downtrend, but a little bit of consolidation going on there. So, you know, we could see a move to the upside because there is signs that it is still strong to the upside. Euro yen, a little bit of support to the upside there, bottom to top move. You can see that we've had a bar yesterday which has spiked to the downside but not stayed. It's come return back, and now we're still seeing a bit of a move to the upside on the euro yen. FTSE showing some support. You know, we have returned back to the level that we were at approximately a year ago. So as you can see there, in January 2020, February, we were at that level there, the 7545 level. We've come a little bit lower, but we're moving back in that direction now. The market has recovered since October. It's had a good strong move, and now there's a little bit of sideways movement, but still showing support to the upside on the FTSE. And the Dow Jones, pretty similar. good recovery since October, and there you are, still showing some support to the upside on the Dow. Coffee still choppy. I'm looking at coffee to still rise a little bit more to the upside. We should be, coming out of lockdown, seeing some movement and more support to the upside, but something to keep an eye on, as some more trades will be coming up. Valid trades for us on the coffee. Brent USD, good rally at the start of the year, but since then a little bit of consolidation going on. The bars are getting smaller, but it's not having a lot of movement, which is good for us because we keep an eye on this small movements here, and then we can start looking at a decent probability of the direction that it's going to break out into and place our trade, so that when it does break out, we're in there early to capture the maximum open equity available for the run. Okay. On the gold has steadily been on a downtrend there recently, but a slight consolidation with two drops. Today we've seen a move to the upside, and then it's coming back down again, so it's still hovering around. There's not much movement as it shows on the chart here for the past few weeks, so no major breakouts on there. And on Bitcoin, is still holding the support to the high. The previous high was there, as you can see. Just broke the 60,000 mark, and at the moment is still hovering very much close to that area, the 58,000 at the moment. So that's the market as it stands for us this week. What we'll do now is I'll go and read to you what we have done in the previous week with our trading rooms. So on the elite room, the primary runners had nothing available for us this week to take away from. So there's 0% on the 20% OE and 70% OE. The cash in 4.0, 20%. We had a trade and ended up with a minus 0.85% loss. So a less than 1% loss on the 20% OE. However, on the 70% OE for the cash in on Elite Room, we have a profit of 1.76% to the upside on there. On the cash in 100 pips, which is something that we've introduced now, looking to take the first 100 pips of a move on the cash in, and that has given us a upside of 0.52% this week. There were no trades on the continuation patterns on the quick exits or the slow exits, so the total for the elite room stands at 1.43% and profit. The live trading room, on the other side, we have money bars 3.0 with no trades, 0%. Primary runners, again, 0%. There was no primary setups and any trades that we had valid on there. So the same for the primary runners, 0%. Lift off 20%, 0%. And lift off 70% is also at the 0% because no trades have qualified for us. We had some trades on the cash in 4.0 TSL primary, and at the end of the week, we've ended up with a figure of minus 0.42% to the downside on there. And the cash in one day exit, similarly, is a minus 1.68% to the downside loss on there, bringing us a total for the live trade room at minus 2.10%. And therefore, a total across both rooms between the elite room and the live trading room has given us just a loss of minus 0.67%. So just over 0.5% on our account, which is not too bad for the number of trades that we have taken. So we will continue with our plans and follow them to the T, because consistency, as we've always said, is the key. So we keep consistently taking the trades and looking forward to having them work in our favor when the markets start moving in the direction as expected. Okay, and that concludes our market update for this week. So until the next time, stay disciplined, follow the plan, and keep trading like a master.